Hello everyone, this is Will coming back with another portfolio review. Thank you so much for any of my returning people that continuously and consistently watch these videos. Thank you so much. I'm just going to start off really quick by saying if you enjoyed this video, any piece of it, leave a like, leave a comment, and I'll kind of prompt some questions if you are eager of answering them in the comments. Just because I really want this series to start to grow bigger and bigger, and I want to capture more people and, get more opinions because I'm always open to suggestions on what people think. I'd love to read through comments, and I just want to inspire other people to start investing because, as you can see on just this one, it's not like I have a lot invested, but, every little bit helps. And yeah, it shows YouTube that this video is worth watching, and that's really what I want to show people. So, kind of starting off here with my Robinhood portfolio. Not much has changed since the last time. Oops, let's see. There we are. I can't remember, but I added Altria Group here. And if you are unaware of Altria Group, they sell cigarettes. There we are. Now, why would I do such dirty things? Well, they pay a really good dividend, and that's really about it. I mean, I'll get to that more when I head over to this tab in the stock portfolio. You can kind of see what we got going on over here. But right now, everything's in the red, but not a big deal because everything eventually goes up. Today, as we'll just go into the history, I added another $100, bought a couple more stocks, and it shows it down here. I canceled it because I just bought it at market value, so I got 2 more shares of Energy Transfer because they also pay a really good dividend for the amount of money I'm investing into them. And maybe I'll add up another tab here towards the end and kind of show you. Actually, I might just do it now. So how I find things out like this is I go to Seeking Alpha. A lot of people have been talking about this. It's nothing new, but then I can type in the ticker symbol. Energy Transfer pops up. So you can see right now they're trading at $12.88 share. And for that, I get $1.22 a year in return. So about 30 cents a time. And that's pretty good for what I'm investing. And if I bring up a calculator trying to not, I'll just use this. So 12.88 divided by 1.22. This is kind of like a formula that I've been using myself to figure out about how much I have to spend per dollar. Granted, this may not always work, and I can show examples in the future of like why that doesn't always pan out, but for every $10.55 I spend on this company, I'm getting $1 in return. This is kind of a quick way to see, like, the lower the number, the less amount of money I have to spend for $1 on the dividend, which is really nice. That's just kind of how I use it to justify it. But all these companies that I'm investing right now are really good companies, so I know, I'll get back to that. But yeah, this has a lot of information. Definitely recommend going through and just kind of checking it out. Just for fun, we'll pick on one of my friends. He asked me a question about like investing in stocks or taxes, sorry. And I asked him what he invests in. He said WWE, and I laughed at him. So if you're watching this, hello. So let me show you kind of another thing. So, okay, I have learned my lesson, and I've taken away my hotkeys so I can use my calculator again. Okay, so back to where I was talking at because I did like 3 minutes, of course, without it. So as I was trying to explain, so if I take 44.33 divided by the dividend of 0.48, you would need to spend $92.35 to equal $1 in this company. Compared to Energy Transfer, that is quite huge. Other things I talked about, because I am so glad I took away, like, the hotkeys were a great idea, but I'm glad I took it away. So other things that I bought was Kraft. They are right now dipping, which is a great time to buy into this company. Kraft is an amazing company. We all know this. We all buy their mac and cheese. I bought regular cheese the other day. Great company. Right now it's dipping, is a good time. They're on sale. So I picked up 3 shares at $27.75, which left me some money left over to buy 2 of those. So yay. So yeah, I didn't really intend to use Seeking Alpha as much, but I guess this is kind of part of what I'm trying to show. So for $26.60, that is a very good deal. So dang it, pop-ups. It's because I don't pay for the full version. $26.60 divided by 1.6, and you can see they're also another really low company. They pay a high dividend. Very, very great. Okay, I think that's the last of Seeking Alpha that I'm going to show. So yeah, that's what I bought today. So brand new purchases. looking at upcoming dividend payouts, I have a lot of them coming in. Really excited. And I can show more of that on the stock portfolio. I have it added up and kind of what I have planned out. But yep, now that we are into the new year, dividends are coming in. January was a little slow, but we're picking up for February and March. Last thing I wanted to cover, because there's a lot that I could cover in Robinhood, is kind of some of my watch list, and I went through and kind of trimmed up some of them. I've kept a lot of the ones that pay good dividends for the amount of money you're spending on them, and I would say a good average is probably $25 a dollar is a pretty good average that you should try to look for. That means, for every $25 you spend, you're getting about $1 in dividend return, which is very good. So that means essentially over 25 years you would get your money back. But yeah, so these are just kind of some of the companies, and hopefully soon I can start investing more than $100 each time to start investing in some of these great companies. But we'll get more to why I'm only doing $100 in a second, because you've seen me in the past do a lot more and why I'm not. So I already have a name of the episode planned out. Usually I just wait until the video is posted to come up with a name on mostly what I talked about, but this time I have something in mind. Taking a look at my M1 Finance portfolio. Right now we have some trades going on right now. It's 9 o'clock. They are doing some investing for me, buying all of my great, if I look at holdings, all my great companies, fantastic. If we look at our gains right now, I have $50 in net gains. It's just because we are in a bull market right now. Everything's going up. $11 in earned dividends. We have now passed the $10 threshold. Whoop, whoop. So hopefully that can start to snowball a lot quicker. And if I just look at like the last month of that, $3 has been in the last month. In the last quarter, interesting. That's weird. I don't know if that's quite right. Maybe it is. But yeah, $10 in the last quarter. So overall, yeah. I don't know why it showed it dip so much. But anyway, yeah, not much to really talk about, because it's auto invest for me. No matter where they're at, they buy stuff. But I guess we take a look at some of the dividends. Again, January was very slow. Like, I think if I do like one more tab, there was like maybe a couple more, but yeah, not too many right here. But now as we peek into February, it's like bam, 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 bam. Every couple days I get one. So Apple paid me 3 cents last night. Yay. All my treasury bonds paid me. Nice 32 cents for investment grade bonds. Yeah, not too much. I think I didn't do my M1 portfolio last time because it didn't come out quite yet, so we can cover that and what we're looking at. Yeah, that's M1 Finance. Woohoo. There's more going on with Robinhood because I have more going on, I guess. This is just a very passive, just drop in $100, let it do the work for me. Robinhood is where I have to do a lot more of my investigation into companies. But eventually that will kind of spill over into an M1 and which companies that I want to get rid of and which ones I want to add. But I tell you, Joseph Carlson picked a good portfolio. If you're unsure what portfolio to make, what he has is amazing. He has done his research, and yeah, he's got something really good going on. So moving along here, because I'm just trying to make this a bit of a quicker episode, I'd say, because I've covered this multiple times. But for people that are new, welcome. Thank you so much for stopping by and checking this out. If you've made it this far, please hit that like button. I really want to get more people to see this video. Also, I work in about an hour, so there's that as well. Oops, kind of peeking ahead. So the usual portfolio that I have set up, if you guys are interested in copying this type of format, I can definitely show a video on how to make it. Definitely, why is that? That looks so weird. Definitely will show people how to make it or how I made it. But yeah, the only thing I added was Altria Group if I didn't show that last time. And then my totals. So not too much here. I just did some averaging. Where is it? Craft. There we are. So now my average is $27.58 a share. Went up a bit, I believe, just because no, it may have went down. I think it went down. Either way, not the point. Bought a couple more shares, more money in there, and then Energy Transfer went down. That for sure went down, and now I have 7 of those. Sliding over to the dividend page, this is kind of what we're looking already. Between projections of this month and next month, you can see it's starting to ramp up a little bit as we get into the year more. Already now at the point where I have doubled what I'm going to make in just 3 months. So 3 months here, 3 months there, doubled. Awesome. I mean, I wouldn't even count really October because GE slashed their dividend, and I didn't even realize that. So it makes me, it's like, do I even want to invest in that company? But we'll hold on to it for now. So yeah, awesome to see. I also did a projected dividends updated just because why not? So looking at what it was at before, 54.28 is what my projected was as of January 17th. Now, a month later, it has gone up a little bit because I've bought Altria Group, and I bought some more Wells Fargo, and I bought more Kraft, and I bought more Energy Transfer. So you can see, these are some of the bigger paying companies, 640, 854 down here, and then Wells Fargo 612, Altria Group 672. Huge numbers. It's just that's awesome. So fantastic. So yeah, that's my projected dividends. Cool stuff. Really excited. This like dividend investing or just investing in stocks, period. Why did no one teach me this in school? This is so much fun. Like, this is the best money I've ever spent because I love making money and I'm spending money, but also making money. And at any point I can sell this and get my money back. Like, why did no one teach me what an asset is? Stupid school system. Very upset, but school's great at the same time. It's just, what can you do? I mean, I don't know. There's a lot of things high school should change for sure. But we won't get into that on this episode. 8 minutes in. Well, on top of my first cut. So taking a look here at the M1 Finance portfolio update here, you can see that from December to January, the dividends dropped quite a bit, obviously. But we'll probably see that peak back up going into February. My new balance for the portfolio is up $500 from where it ended in December. So kind of excited to see where February ends and where I'm at with that. Probably not a whole lot. Probably another $300, I would imagine, would be my projection. But let's see if I can zoom out a little bit. I preferred that kind of before. Then you get to see a little bit more. Numbers are a little bit smaller, but then you at least get to see the charts. So yeah, this is where my average income should be. So by the end of the year, I should be about $3. And that's what that's what it's showing on here. So about $3 is what I should get a month. Going into December. So obviously it's going to be a little bit more than that because as I add more money, the companies are going to be paying me a little bit more. I mean, as we just kind of slide back here, obviously I'm buying full companies, but in a month, my average for the year was going to be $54.28, and now it's gone up to $70 nearly. So I imagine the same thing will happen with this. It'll ramp up a little bit faster, but that's where we're sitting at as of Valentine's Day in 2020. And it's also my brother's half birthday, so happy half birthday, brother. Again, another kind of chart of what my actual monthly income is. Yearly income, again, my average is sitting at about $40 is what it'll be by the end of the year. Yeah, about 35. Currently is sitting at about $20, so not bad. And again, another portfolio view. And again, created by Joseph Carlson. This is where I got this. Makes sense. If I'm copying his portfolio, I should probably copy how he has this laid out. I mean, it's smart. It makes sense. So just wanted to show you the updates on this. Now, this is going to be the meat and potatoes of my show. Why am I only doing $100 these last couple of weeks when I'm, clearly have the cash flow currently in my situation to do more? Because I am tackling debt. As you can see, where I ended in January is $5,000 on my watch loan. I've currently tackled that down to another $1,200, down to $3,800 with part of my return and part of my check. Even today, I put, I think it was $600 and then another $500 on my watch. I am aggressively tackling my debt. I don't have a lot in terms of a lot of different debts. I just have two. But the sooner I can pay off these liabilities, the sooner I can start pumping my investments faster. That is my plan. As much as I love investing and making money, if I pay off my watch loan, I effectively just got 7% returns instantly. That is how the math works out. And when we tab over to the other one, I will explain that a little bit more. I haven't really updated right now I'm sitting about $13,000. As soon as I get my federal tax return, I'm going to drop that even farther. By the end of the month, I project to be about $1,400 on this watch loan. That is amazing. All the money I'm then putting on my watch will then go into my car, snowballing that quickly. My plan at the beginning of the year was to have $10,000 between my two portfolios. My plan has changed slightly. I plan to now tackle my debt and get that paid off. That is my goal. With me selling my Mustang, that will definitely help because, it's already about that. So very, very quickly, my debt will be paid off probably by summer, I would imagine. The end of the year is my goal, but with me selling my car, that will help quite a bit, and the tax returns. So that is kind of my current plan. Just trying to think of what else. Let me take a water break here. Then I can aggressively attack my portfolio and add more into it. Again, this is a look into my liabilities and assets. How often do people do that? Not often. Smash that like button, boys and girls, if you're watching. So I haven't updated much. I'm sure my Fiesta isn't actually valued at $10,000, but at least now I have a positive rough from where my loan is. I'm no longer underwater, essentially, where for the previous months I was. So that kind of helps over here in my asset totals. My watch apparently went up in value. Not sure why. I think it was just the average on Chrono 24. So cool. I made another $150 on my watch. I imagine that to go down soon, but we'll see. So yeah, I've got some quite a bit positive value on that. Again, went up $100. Not a huge growth because, again, I'm tackling the debt, and when I tab over here, that'll make more sense. Retirement account slowly going up because it gets pulled from my check. Not much I can do there. So probably next week I'll have that deposit from my check today. I think that's another like $80, we'll say. Savings goes up, goes down because, it pulls out of here and pays off this because I always move. Pretty much, I use my hand to show, even though you can't see it, but I move. All my money goes into checking and then gets dispersed out from there. So that's why I usually see a lower one. So, yep, put $150, a little bit more than what I normally budget for savings, plus the payments for this. So it should go up positively, and you kind of have seen that growth over time because December really cleaned me out. So I'm just trying to slowly build that up. So as you can see, I've had a pretty good growth. I guess it doesn't. I'm thinking about doing like change in asset total, but we'll see. But again, another huge jump. My net worth is going up. Current net worth, because again, assets minus liabilities, and then the change from month to month is another 2,000. So again, a lot of that's kind of in the leaving my vehicles about the same, but that's not totally right. So again, explaining more on how I'm getting like 7% instant return on my money. Stock market is averaged. You don't always get growth. Right now we're in a bull market, everything's going up, but in a bear market, everything's going to go down. As soon as I can pay this off, I've got an instant 7% return. I'm no longer paying 7% on this, what was like $4,000. So I'm saving tons of money, and gosh, let's see if I can kind of quickly calculate that out. So 3861 times 0.0719. That's like $277. That's huge. And that's just on that. If I bring up another calculator, I normally slide everything over to half the screen because I have a calculator quick thing. So 5 times 0.0339, that's another $400. So just trying to aggressively pay this off. So right now I'm just taking any extra money that I have for my checks and taxes and just throwing it at this so that I can get this paid down. So took down a big chunk, and as soon as I can get this paid off, I'll be able to make $330 every month towards my car, and that will pay it off much faster. Again, just to show that, so 9944.06 divided by 250. So what did I say earlier in this video about me learning my lesson? Okay, I didn't delete all my hotkeys. So when I hit 5, it muted my mic. So I was trying to look back. So basically what I was trying to explain, if you couldn't figure it out, I was just figuring out what my monthly, like how long it would take me to pay off my car and my watch based on minimum payments and how that snowballs. I think the last piece I was kind of talking about is the difference between the snowball and the avalanche, and I'm fortunate of doing both. Quickly, if I didn't explain it already, I'm sorry if I'm doubling up, but I'm just trying to cover my bases. The snowball method is paying the lowest balance to the highest balance no matter what, regardless of interest. The avalanche is paying the highest interest to the lowest interest no matter what. Well, I'm fortunate where both of these are the same deal. And generally speaking, credit cards have the higher interest and the lower balance. So that's usually where you start. But very, very fortunate. But I have this in my budget. No matter what, every month I'm paying $330. So I've kind of looked at alternative, like paying an extra $200, which if I, just calculate that, so that'd be, and that would be a lot of money, per month. I mean, obviously I've budgeted for it, so it's not a big deal, but, trying to think. So an extra 200 each, that would be an extra 400. So 730. Geez. Yeah. That'd be done in a year. Literally. I would have to just do like an extra $50 probably. 99.44 divided by, so an extra 50 would be 780. Yeah. I still a little bit over a month, but again, the premise is there that an extra $50 a month helps a little bit here and there. So that is the plan. And that's why I'm aggressively paying that off. My goal is to be done by the end of the year, and my reward is buying a brand new suit. I would love to buy a watch, but obviously I'm in debt because of a watch. And that's so stupid. But you know what? The thing is you can make mistakes. Mistakes are okay to make. If you make them twice, that's when it's a problem, when you don't learn from your original mistake. But again, this was something to reward myself for finishing school, and I didn't finish with any debt. So overall, I guess I'm doing a little bit better, but yeah, that's kind of my plan right now. And I love giving you guys kind of a look into what I have going on right now. Because I think it gives people, builds people some motivation. There we are. I think the $100 went through. Yep. So now my portfolio went up a little bit more. You can see that little jump. So yeah. What did it buy me? What did it buy me today? So you can kind of go through and you can see, it bought me another $10 of investment grade bonds, realty. I think that's another realty or real estate, I should say, REIT, energy, REIT, so great companies. So yeah, that's all I really got for you guys today. Kind of what my plan is going forward. Hopefully, in a couple more weeks, I have a little more to, excuse me, this water's coming back to bite me. I think this will be posted on Sunday here. I'm recording on Valentine's Day. I'll probably post it Sunday. And then it won't be the 28th until I get paid again. So we'll expect to see another video around there. Maybe I might wait till end of March so I can start to update a little more in terms of my M1 finance portfolio. And that's really about it, because that's the only one I ever need to wait for. But yeah, we might wait into March. I think March will wait until the next one, because I've done 2 already, I believe, for February. 1 in the beginning, 1 now. Actually, I can't even totally remember, because I got paid. Yeah, I think it was it's been about a week since I posted the last one. So we will wait until March. It will be a little bit. If something big happens and I'm able to make another video, I will. But I probably won't see you guys or talk to you guys until March. In terms of if you're watching this, I post daily videos, gaming, every day. So check me out on those other videos. And if you've made it this far, if you've stuck through all my problems that I managed to have, I appreciate it so much. Leave a like, comment something about your day. That'd be great. About your investing strategies, what I could change. Anything is open and fair game. Thank you so much, guys. Have a great day.